Hey everyone, today I'm going to be talking about super microcomputer. They've kind of been under a lot of heat recently because their auditing accounting firm dropped them, which is almost never a good sign. However, I'm looking through their financials and it honestly looks really, really good. So we're going to take kind of a deep dive, go into it, see what their financials are looking like, and then I'll give you the rating by the end. So try to subscribe and let's get to it. All right, so taking a look at their snapshot, average cost of capital is solid at 9.6. Their target price is 37, which is good. Long-term growth rate isn't listed, although considering it is an AI sort of semiconductor stock, it has to be good, but not listed, so I'm giving it the 0.5. Let's head over to the income statement, see what that looks like. So, for their income statement, their sales increases have been insane in the past few years. Very, very strong, very consistent so far. Operating income, again, is much, much higher. Now, one thing I will say is that their sales more than doubled, but their operating income less than doubled. That's really not the craziest thing in the world, but just a thought. Um, Net income again is looking very good. Now their income did just about double, so really there's nothing to it. EPS is increasing. There's actually no data yet for the most recent year. So the thing with them is they've had problems with their accounting firm that does their audits, which usually is bad, especially when the accounting firm drops them. But from everything I'm seeing, it seems very good. Their total shares, I mean, no, total shares have been increasing. Yeah, total shares have been increasing, so I'm probably just going to not give the credit for that one. Let's check out the balance sheet, see what that looks like. So, cash is really good, increasing, good amount of reserves. Um, Assets have tripled, almost tripled in 1 year, which is insane. Short term debt is fairly little compared to their cash, which I like. Overall debt decreasing is not happening, but honestly, that's again not much of a big deal. Retained earnings are positive and growing, which is great. Let's check out the cash flow, see what that looks like. So for operating, now, one thing I'm going to say here is that considering there's no data for anything to say like specifics, I really don't know about this net operating cash flow. So I'm kind of going to base it more on before that. So I think I will do the 0.5 for the increases. I mean, it was increasing, and this is preliminary and not finalized yet. For the investing, it is all negative, which is nice. Financing is kind of half and half. Probably not doing the point for financing, although reduction of debt is nice to see. So, I think I will do the half point only because, you know what though, the preliminary is not looking good. That's gonna get to zero. And then for free cash flow, again, net change in cash was very positive, apparently, and the free cash flow has been mostly positive. I mean, more positive than negative. So I will do the one there. I'd imagine the free cash flow will be positive, but then again, that's also apparently from financing activities. So I don't know how good that free cash flow is, but it is positive. So it's sort of a mixed feelings kind of thing there. For this, I really don't know what to say for it because, again, it is preliminary and like I don't know how complete the data is for it, but in terms of repayment of debt, it looks like they are sort of 50-50 with it, but they issue more than they repay. Excuse me, but I mean, really can't give the point there. They issue more. For repurchasing of stock, they actually outpace their equity issuance by their repurchases. So honestly, and I mean, it did increase technically, but just over a year gap. So that's, I guess, good. And considering they outdo the equity issuances, that's better. And then let's just go right into the ratio, see what that looks like. So net margin is stable, improved from a couple years ago. Looks good. In terms of, you might think that this went down, but you also have to remember their sales tripled and their net margin went down less than 1%, which is amazing. So that's getting the full credit. ROA, ROE is consistently positive. That looks good. Long-term debt to total equity is increasing, especially with if you saw earlier, they did have a decent amount of long-term debt that they just started with. But I mean, yeah, has been increasing. So no credit there. So for Super Micro, it's looking like the final score 16 out of 22 for a 75.5. That is not too bad. We'll have to see with their next earnings report coming out what the issues were with their accounting firm dropping them. But honestly, it could just be like some kind of administration problems. It could be something else where it just wasn't a good fit, or it could be something seriously internally wrong with the company. We really just won't know until probably the next earnings report comes out, or there's some kind of press release about it maybe, or they'll just never tell us why. But either way, that's about it. Feel free to subscribe if you want to, and I'll see you in the next video.